U.S. employers adding 420,000 jobs in April. Unemployment rate holding steady at 3.6%. Leisure and hospitality leading the gains, followed by manufacturing and transportation. We want to bring in Betsey Stevenson, University of Michigan Professor of Public Policy and Economics. Betsey, when you take a look at this headline number, 428,000 jobs, very strong. But now we've had a chance to dig into this report. So what do you think of it?
Yeah, I think it's a really strong report. What we see is employers want to hire, and we can see that in the record number of job openings we have. But we can see in today's report where they were actually able to expand hiring by 428,000 workers, that they're still able to pull a lot of new workers back into the labor force. When you think about this, we're not in the early recovery stages anymore. We're in late recovery stages. We've returned really to a lot of back to what we were before in terms of GDP. We still need to pull some workers back in and build employment up a little bit more. But 428,000, compare this to what we had, following the 2008 recession, where we sort of built back employment, 200,000 workers a month, month after month after month, for 10 years. Now we're doing it at roughly 500,000 workers a month. That's obviously a much more rapid pace. I don't know how long we can continue that pace, but for now, what we see is we're able to get the strong growth in jobs without too much upward pressure on prices.
And I want to ask you about the quality of jobs. We saw that after the 2008 crisis, it was a lot of part-time jobs, gig economy. What do we know about the quality of jobs that are coming back now?
Well, what we see is, people who are working part-time actually came down in this report. So these are certainly people moving into full-time jobs. When we take a look at pay, really dig into the data, what we see is that wages at the very bottom are the ones that have been pushed up the most. I think the bigger sort of compositional shifts come from where consumer demand has been going. So, you mentioned that leisure and hospitality had a lot of hiring this month. They're digging out of the biggest hole. That's the sector that lost 1 in 2 jobs during the worst part of the pandemic. They've got a long way to go to fully recover. They're nowhere near fully recovered, but making progress every month. But then you also talked about manufacturing. And that, we've seen demand for goods really through the roof, well above pre-pandemic levels of demand for people wanting stuff. And we're adding those jobs in the U.S. To meet that. What we haven't seen is a full recovery in demand for services. And we're a service-based economy. That's where most of our jobs are. And particularly, we've seen weakness in the care sector. So we're not bringing back as many of our service sector jobs in things like nursing and residential care facilities and childcare. So some of those jobs that aren't coming back, like childcare jobs, are low-wage jobs. But nonetheless, we actually need them to come back. We need to get childcare workers back in order to be able to bring all the parents back into the workforce.
Betsey, right now the Fed is in a tough spot because they have to combat rising inflation, but they also have to do it without letting the economy fall into a recession. We heard from Fed Chair Jay Powell earlier this week. What did you make of the announcement? And I guess, how does the Fed deal with this balancing act?
Yeah, so I think the most important thing that Chairman Powell said was they need to make sure that people understand that they will get inflation back down to 2% in the long run, that they haven't abandoned that target, that they're committed to it. And they don't want to see people's expectations around where future inflation is going start to adjust so that people start thinking, oh, we're going to have this high inflation for a long period of time. I'm going to need to ask for more of a raise, build it into contracts that I sign. Once people start behaving like they think that inflation is going to be higher in the future, that becomes really problematic. I think what they want to do right now is put the brakes on, but do it slowly as long as they think long-run expectations about inflation have remained anchored and stable. If they feel that that's starting to get out of control, they may have to slam the brakes a little harder. I think today's report says they're doing exactly the right thing. We didn't see a lot of upward wage pressure in that. We didn't see wages rise by very much. So we don't have to worry that there's a whole bunch of people out there in their current job that are looking at inflation and saying, hey, we had an 8% inflation. We're going to have inflation going forward. I need you to give me an 8% raise. the boss giving them an 8% raise and then pushing up prices because they can't sell their stuff when they're paying their workers 8% more without raising prices. That's how inflation becomes sort of a self-fulfilling prophecy. It feels like that's still contained right now when we take a look at the jobs report.
And it's interesting because we have had some guests on this week who've said, look, this wage price spiral is starting, but you see things differently. What are you keeping an eye on in terms of that space?
So I don't think that we see the wage price spiral starting. What I'm looking at is what are employers say that they're doing? How much are they raising wages for workers this year? Are most employers looking at their employees and saying, yep, you're going to get 5, 6, 7% raise? And I think, no, I think what we're seeing is raises that are going to be contained around 3, 4%. The biggest raises are happening for people who change jobs. That's always the case. As we put people into new jobs that are better fits for them, for most workers throughout their career, the big wage gains come from changing employers. So we've seen some wage gains that are coming from that. What we aren't seeing is the workers who are staying put getting big wage gains. And that's why I think we don't see the wage price spiral yet.
It certainly is nuanced. We do appreciate your insights. Betsey Stevenson there, Professor of Public Policy and Economics at the Ford School at the University of Michigan.